Every day, in thousands of office buildings across the globe, a silent crime is being committed. It doesn't involve masks, sirens, or broken windows. It happens in the quiet clicks of a mouse and the soft rustle of paper receipts. Expense claims look routine. A taxi ride home, a business lunch, a simple printer ink refill. They are the standard pulse of corporate life. But hidden deep inside these mundane claims are silent frauds. Most managers look for the big theft, the headline-grabbing embezzlement. But the real danger is much smaller. Small reimbursements, a few extra dollars here, a fabricated bill there, can quietly turn into massive, multi-million-dollar losses over time. Today, we uncover the corporate secret of how the smallest lies create the biggest financial collapses. This is the hidden world of expense fraud. Why do honest people start stealing? And how does a $50 claim become a corporate disaster? Stick around, because the answer is hidden in plain sight. At its core, expense fraud is the intentional manipulation of a company's reimbursement system. It's a breach of trust disguised as a business necessity. Every company has a policy, a set of rules designed to keep things fair. Genuine claims keep the business running. They are the oil in the corporate machine. But fraud? Fraud often starts with just one harmless-looking claim. A coffee that wasn't for a client, a meal that was personal. It's a psychological slippery slope. Once an employee realizes that a $10 lie goes unnoticed, the boundary of integrity begins to dissolve. Understanding the difference between an error and intent is the first step in protecting the bottom line. It's not just about the money. It's about the erosion of the corporate soul. When rules become suggestions, the entire system begins to fail. One of the most common tactics is bill inflation. This isn't about creating a fake document from scratch. It's about adjusting reality to fit a narrative. A $20 taxi fare becomes $50. A hotel bill has a zero added at the end. In the world of finance, a small change in numbers results in a massive change in payout when scaled across hundreds of employees. Fraudsters often target round number thresholds, staying just below the limit that triggers a manual audit. It's a game of inches, where the thief bets on the fact that the auditor is too busy to check the original digital log of the transaction. They aren't looking for $1 million today. They are looking for an extra $100 every week. Over a career, that small adjustment adds up to a life-changing amount of stolen wealth. It is the death of 1,000 cuts. As technology advances, so does the ease of deception. We are no longer in the era of messy handwriting and whiteout. Today, professional-looking invoices can be generated in seconds using simple online tools or even basic image editing software. A fraudster can create a vendor that doesn't exist, generate a realistic receipt for consulting services, and submit it for approval. Because the document looks perfect, complete with a logo, a date, and a valid-looking tax ID, it bypasses the initial visual scrutiny of most managers. In the digital age, seeing is no longer believing. Technology has made the fabrication of reality a silent, efficient process. It's a digital forge where fake truths are hammered out in the dark, and once they enter the system, they become indistinguishable from the truth. If the system trusts the document, the fraud is already complete. Imagine getting paid twice for the same lunch. This is the strategy of duplicate claims. An employee might submit a digital photo of a receipt through a mobile app for immediate reimbursement, and then weeks later submit the original physical copy through the legacy corporate accounting portal. If the two systems aren't integrated, the fraud goes undetected. Or they might claim the same expense across different projects or departments, hoping the managers don't compare notes. It's a simple trick: same expense, multiple recoveries. It relies on the fragmentation of corporate data, where the right hand doesn't know what the left hand is approving. In large organizations, this fragmentation is a feature, not a bug. And for the dishonest employee, it's an invitation to exploit the gaps in communication. It's the art of being in two places at once, financially speaking. Then there is the misclassification of life itself, the lifestyle subsidy. Personal comfort billed as business necessity. Weekend family dinners disguised as client entertainment. Personal electronics labeled as office supplies for a remote workspace. This type of fraud is often rationalized by the employee as a perk they deserve for their long hours and sacrifices. It's a sense of entitlement that turns the company's bank account into a personal slush fund. Because these expenses often look legitimate on the surface. After all, employees do eat and travel. They are among the hardest to detect without deep investigative questioning or cross-referencing with personal calendars. It's a slow leak of company resources into personal pockets, justified by 1,000 small, "I deserve this" excuses. But entitlement is the enemy of integrity. Fraud grows faster when two people agree. This is the danger of collusion. When an employee and their manager work together to approve fraudulent claims, the internal controls are rendered useless. They might split the profit or simply cover for each other's personal spending to maintain a certain lifestyle. Collusion is the ultimate nightmare for an auditor because it bypasses the very checks and balances designed to stop theft. When the person meant to watch the gate is the one opening it, the organizational damage can be catastrophic. Trust, which is the foundation of any business, becomes its greatest vulnerability. In these scenarios, the fraud isn't just a financial loss. It's a systemic infection that can bring down even the most powerful corporations. Silence is the accomplice of theft. Unclear policies create clear opportunities. When a company uses vague language like reasonable expenses without defining specific limits, it creates a massive gray area that fraudsters are happy to exploit. What is reasonable to a high-level executive might be extravagant to a junior auditor, yet many corporations leave these definitions open to interpretation. These loopholes are the breeding grounds for fraud. Without strict caps on meal costs, hotel tiers, or travel classes, employees will naturally push the boundaries. A strong defense starts with a clear, unambiguous rulebook. Ambiguity is the playground of the dishonest. If you don't define the line, you can't complain when someone crosses it. A single word can cost a company millions. Scrutiny is often a victim of speed. In the high-pressure corporate world, managers are often overwhelmed with hundreds of reports to approve by the end of the month. This leads to approval fatigue. When volume increases, scrutiny decreases. The manager starts to look only at the total amount, ignoring the supporting documents to save time. They trust their team, so they click Approve to clear their inbox. Fraudsters know this. They hide their suspicious claims in a batch of 50 legitimate ones, betting that the manager's desire for efficiency will outweigh their duty of care. It's a calculated risk based on the reality of human exhaustion. When we are tired, we stop asking questions. And when we stop asking questions, we start paying for lies. Scrutiny is the price of security. But fraud survives only until someone looks closely. The moment of discovery is rarely a sudden gotcha. It's usually the result of a pattern being recognized over time. A forensic auditor notices that one employee always has the highest meal expenses in the department, or that multiple receipts from different employees have the same sequential invoice number from a local vendor. This is where the house of cards begins to wobble. Detection requires a skeptical mind and the right tools to find the anomalies in a sea of data. Patterns always reveal intent if you know where to look. Data doesn't lie, but it needs a voice to tell the story. The truth is always there, buried in the numbers, waiting for the right person to dig it up. The game is over once the pattern is seen. Thousands of small frauds create one big disaster. It's easy to dismiss a $50 fake bill as immaterial. But when 1,000 employees do it every month, you are looking at an annual loss of hundreds of thousands or even millions of dollars. This is money that could have been used for raises, for innovation, or for the very survival of the company. Instead, it is drained out, weakening the organization's financial health and corrupting its culture. The organizational impact isn't just financial, it's the erosion of morale. Honest employees see others getting away with theft and feel like fools for following the rules. This is how corporate culture dies, one small expense at a time. 1,000 tiny leaks will sink the largest ship. Every fraud leaves a footprint. Successful organizations train their teams to spot the red flags. Is the receipt blurry? Is the date on a weekend? Are multiple employees submitting bills from the same place at the exact same time? Prevention is about vigilance. The modern defense is a combination of AI-driven validation and strict human oversight. Real-time auditing software can now scan receipts for duplicates and cross-reference them with global databases instantly. But the strongest control is a culture of accountability. When employees know that every claim is subject to a random deep-dive audit, the temptation to cheat vanishes. Smart systems don't just find fraud, they prevent it from ever being attempted. Protection is the best investment a company can make. Integrity is the only sustainable business model. Expense fraud rarely begins with criminal intent. It begins with a small justification, a minor lie, and the belief that no one will notice. But in the corporate world, the truth always has a way of surfacing. The smallest leak can reveal the biggest secret. Protecting your organization starts with understanding the hidden mechanics of deception. We hope this investigation has given you the tools to see what others miss. The secret isn't in the big heist, it's in the small claim. Stay vigilant, stay honest, and keep looking beneath the surface. The truth is worth the effort. If you want to uncover more corporate secrets and protect your professional world, like, share, comment, and subscribe to Corporate Secrets. Join our community as we shine a light on the hidden side of business. Your support helps us continue these deep dive investigations. Until next time, stay vigilant, follow the trail, find the truth.